Smart money seem to be positioning for the next major move, and the question remains, which way we're going, up or down? That's what we'll discuss in today's show. We'll have a look at the traditional markets as well, since we do, of course, have the Buffett indicator, which still actually suggests that the markets are significantly overvalued, right? And we know that Warren Buffett is still positioned fully in cash, right? So if you have a look over here, in order to get into the undervalued territory, we need to see the Buffett indicator showing a ratio of 85% or less. The current ratio is sitting at 177%, which of course places that in the overvalued sector. And if you do have a look at someone like Warren Buffett, well, he's actually outperformed the S&P 500 significantly over the last 35 years. If you focus on this chart over here, that is Berkshire Hathaway in the blue and the S&P 500 in the red. So what do we do? Which way do we go? Well, the stock market is still in a downtrend over here, still resisting with the RSI off of that bearish divergence, which we identified all the way back in December leading into January. And that was a little bit of a warning signal over there as prices do come down. And ultimately, I think for your swing trades and your long-term positions, all you need to do is look to the stock market in order to determine where price is going next. As it currently stands, the stock markets are, of course, closed. This is an Easter long weekend, which means that volumes are incredibly low. But the base case that you're going to be leading into the next week is that the stock market is just chopping between these two ranges. If it can break back above this part of the range, potential for bullish price action. If it holds below the bottom of the range, of course, that means new lows, and you are going to be moving into the next major support levels, which we'll discuss when relevant, right? So we have been trading the stock market, right? This is dropped in the Whale Room Discord over there. It is under Trader Sing section, Vantage Markets. You can see we've been taking the short trades over there in real time before they happen and playing them out to perfection. So there is an opportunity for those of you that do want to get into Whale Room. By the way, you have a twofold opportunity. One will unlock some access, the other will unlock full access. If you do want to unlock full access to absolutely everything, remember, use the link in the description below over here. There is a promo code for the Easter weekend right now that is save 27% off of the membership fee by using the promo code RISEN27. RISEN27. They not case sensitive, so it can be caps or small letters, whatever you want. Click on that, will take you through to the Whale Room page. Go through over here, type in the promo code, click join, select your membership, go in, put the promo code down there, RISEN27, and you'll save 27%. All right, let's continue on over there. I'll also outline how you can get in theoretically for free. Stay till the end for that. All right, so having a look over here at the Polymarket bets as well as the probabilities from Bloomberg, basically chances of recession are going up. We saw that the Polymarkets predicted pretty accurately that Trump was going to win the election, and that started to get priced into the Bitcoin chart. So a reminder, the Buffett indicator is still sitting at significantly overvalued territory, while simultaneously you have the Polymarkets and all other betting sites predicting with higher probabilities it is rising towards the upside that the market is going to move into a recession, right? It's a little bit too soon to tell. We need to wait a little bit longer, but ultimately still gold continues to press up to all-time highs, breaking out of a multi-year cup and handle formation and putting in one of its biggest parabolic moves we discussed yesterday, specifically what that meant for the risk on assets. And it was a little bit inconclusive, right? Sometimes when you saw the gold price move into parabolic advancements or price discovery, the stock market also followed, and other times it didn't, right? So I think you need to take each chart independently, and now it's high time to pay attention, right? But again, Buffett indicator, right? Are we going to fade the old man? Maybe on Bitcoin, but not necessarily on the stock market. He's most likely going to be correct. So I think that it's an important time to focus on what the traditional markets are doing, what commodities are doing, because it's all one big trade. These things all fit in very, very well together. And in fact, if we do move into a major recession or depression or bear market for the stock market, this would actually be Bitcoin's first time in that environment, right? Remember, Bitcoin was created after the great financial crisis, just after the 2008 housing collapse was created in 2010. And basically, this would be its first time going to the rodeo, right? It is its first rodeo when it comes to a major market crash. So I think we need to understand the way that these traditional markets work. And for that, remember, guys, we are doing Whale School, trade crypto stocks and commodities like a whale. This is how you can unlock access to this particular channel over here, where we're doing the CFD trading, the traditional market trading, right? So if you sign up to Whale School to this particular cohort, you'll be able to unlock access to that particular channel, right? You don't have to pay the $2,000. Everything is linked below for those of you that want to take your trading seriously. And the best way to do it is to sign up to 𝗿𝗡𝗄𝗃 using the link in the description below. Make a small deposit. Why is this the best way? Because you can win a Ferrari at the same time, right? So not only can you get into Whale School for free, the user ID that's generated will get you into the competition to win a Ferrari as well, right? So $1 million prize pool over there. It's a two-step process. Sign up to 𝗿𝗡𝗄𝗃 and make a small deposit using that particular link that gets you in the Ferrari competition. That generates your user ID, and then go through to Whale School, click over there, and use that user ID to verify yourself. Very important. If you're not verified, you can't get in, right? Very, very, very important. So where does this leave Bitcoin? Where does this all leave Bitcoin? We're talking about the Warren indicator essentially saying overvalued, and the Buffett indicator is looking for much, much lower prices and for things to come down quite a lot. We see gold moving into price discovery. The S&P 500 is in a downtrend. Crypto may be facing its first ever bear market, or at least, should I say, its first ever environment where the stock market moves into a bear market. Crypto has been in bear markets before. So where does that leave crypto? Well, all we have to look at is the high time frame valuation charts. If we look at the Bitcoin fair value using this regression band over here, ultimately fair value is that line over there. Now, typically what we see is, generally speaking, when Bitcoin is below that line, it is usually a good time to be buying Bitcoin, and you want to be selling Bitcoin when it's over the top of that line and approaching the upper boundary. What's interesting about this is, if we do zoom in over here and we have a look at where that should place Bitcoin right now, in order for Bitcoin to be considered fair value, it should theoretically be trading at $123,000. At this current point in time right now, of course, we're trading far below that level. If it trades at the lower bound, it would be $100,000, and the upper boundary, which would be overvalued, would be $150,000. And every cycle we have actually made it over the top of that boundary. The important thing to understand is that price action trumps everything. Price action is the most important thing. In other words, buy low, sell high, or sell high and cover your shorts lower, right? That is the way that you make money within the markets. And a lot of these price models can break. So are we deviating from the 4-year cycle? Well, if there ever was a time to deviate from the 4-year cycle, I would expect that it would be when the Buffett indicator is basically telling you to go completely risk off and the stock market is starting to break down. So there's a lot of moving parts over here. But if you have the faith and the conviction that the market is going to move towards the upside and the bull run is still on, well, then this is something pretty significant to consider, that you'd still theoretically be buying Bitcoin in an undervalued zone. Another interesting thing to look at is the valuation versus the trend line over here. And this would have been the worst bull market we've ever seen in the history of Bitcoin if the top is in fact in. So could we go through a mini bear market alongside the stock market, reaccumulate, and then later on in Q4, possibly even in 2026 at some point within that year, put in new all-time highs and continue for an extended cycle, meaning you theoretically anyway broke the 4-year cycle? Of course, that's a possibility. As you can see over here, fair value is the red line. We are significantly below that fair value line, and that's actually where we've found the points in time with the best opportunities to allocate into Bitcoin. So if Bitcoin is here to stay and Bitcoin is going to do phenomenally well, you can see we haven't even come anywhere close to those 2021 peaks. You could draw a trend line that runs down here. You can see that theoretically each peak is getting lower, right? Diminishing returns. That's the name of the game when it comes to the markets. As the market appreciates over time, there is less meat left on the bone, right? Getting in early in crypto in the early days was much more risky. So there was much more meat left on the bone for bigger moves. But now maybe you're just going to oscillate over the next years back and forth within a tighter range over this trend line. So you need to be looking for a little bit more of a better trigger plan when it comes to getting into the market, right? The historical risk levels also suggest that things are relatively low risk. We're sitting right there in the mid-level. sitting between 40 and 50%, which means if the cycle is to continue, we're more or less in the middle of where things should go in terms of getting overheated. Since there's diminishing returns, I would expect that the historical risk level bands would also not heat up to quite the same levels that we previously saw, which would have been that 90 to 100. You can see the little red dots that have just populated at the tops of the prior cycles, right? But instead, we might only print, the 60 to 80 range, right? Not 80 to 100, but 60 to 80, which would therefore look something like this. And that is something that we need to look out for. 60 to 80 tops could form in the diminishing return cycles between that 60 and 80 zone. So if Bitcoin were to get to its fair value, as I just discussed over here, as per the logarithmic regression, again, fair value right now would be considered $120,000 or $123,000. Where would that place Bitcoin in terms of the broader market cap? If you run the math over here, as per Colby, $91,150 flips Saudi Aramco. We have 109,000 flipping Amazon in market cap. 107,000 would flip Google. So at that point, if we get to fair value at this point in the cycle, as per the regression bands, we should already be valued more than Google, right? If we get to 156,000, we flip Microsoft. 170,000, you flip Apple, and 179,000, we flip NVIDIA. Now, it's really important to understand how Bitcoin fits in to the broader cycles as per the market cycle theory, right? So if you do come into the school course content over here and you go into the actual course and you go and you have a look over here, there's a section where we actually cover this specifically, and it's under market cycles. If you go into market cycles and you click on this over here, it should open up, but it will only open up if you fully verified, just to be clear, right? We go into whether you should be concentrated or diversified at particular points within the cycle. Now, that's really, really important, because where are we within the cycle, right? Well, either we've broken the 4-year model or we have an extended cycle, and therefore we're only about 3/4 of the way through. There's a specific way that you need to structure your portfolio within that particular point of the cycle. Again, we'll be covering this at length, right, when we do start the course in 9 days' time. So again, guys, you can sign up absolutely for free there, and you can win the Ferrari at the same time. You have to get verified to get in, right? So what are we looking at over here, right? In order to determine whether the cycle is still on or the cycle is over, one thing that I like to look at is the RSI. The reason that I like to look at the RSI is because it's got a pretty good track record as a back-tested indicator that you can use over time. And generally speaking, what you'd want to see is you don't want to see the RSI hold below the 50 level on a weekly scale for prolonged periods of time. What we have seen is, if you focus on this over here and you look at how it lines up with that, the price chart in blue over there, most of the time when you're in that 50 zone or just below the 50 zone, you need to reclaim it pretty quickly in order to continue the bull run and continue towards the upside, right? If it loses that 50 zone like it did over here, you get a couple of dead cat bounces, but it continues to maintain under that 50 zone. You ultimately lead back into a bear market, right? And we've seen that every single time, right? If you look at the last bull run over there, you can see generally the RSI held that 50 zone and continued to grind towards the upside until it got into the red zone, which led to the parabolic advancements. That was your 2017 cycle, which ended in December 2017. And then if you look at the next cycle over here, which was your, of course, 2000 and your COVID lows leading into the 2021 peak over here, it was pretty much the same thing, right? Barring the COVID lows, which dropped it back down to the green zone on the RSI over here, you needed to see that RSI consolidating above the 50 mark. There's the 50 mark, right? As long as it consolidated above the 50 mark, price went parabolic and continued the bull run. But as soon as it started to lose that 50 mark and consolidate underneath that level, you got into trouble, right? We did go in for a double top over there, so we can just reset the zoom. But then soon after that, once the double top was set in, it led to an interim price peak again, came down, consolidated under the 50 mark, and then led into a bear market territory. And that's what we need to be careful of, that's not happening right here, right? So you can see where we're right now. We're attempting to reclaim the 50 mark. It's important to focus on the RSI because we're seeing the chances and possibilities of a price shift right now with the RSI breaking its downtrend, which I'll show you on a chart in just a moment. So understand the broader picture of how it all lines up together. If you can reclaim that 50 mark, consolidate over there, there's a chance that the price may continue towards the upside, and we can start to target some of these fair value zones once again, which will be phenomenally good, right? We all want price to go up. It makes for much easier trading. But remember, we do trade the market both ways in Whale Room, right? So we do go long and short. Our traders and coaches are pros when it comes to this. So if you are looking for trade opportunities, they are, of course, there, right? Now, if the RSI fails to reclaim some of those key levels, which we're going to look at in just a moment at the actual RSI, please do keep in mind that we have seen a bearish cross on the 1 week, 2 week, 3 week, and we're about to see the cross on the monthly time frame for the MACD. The significance of this is that every single MACD cross marked by the vertical white line running down the screen over here basically confirmed that you were in a bear market, right? This one, of course, led to an interim pump, and then you dropped into the COVID lows. This one over here led into the bear market, and we have to study the RSI. The RSI is in a very similar place to what we saw back in 2021 following that peak. And then we've got this one that just crossed, and the histogram is working its way back down, right? So we need a lot of things to happen over here, which means any of the price moves towards the upside, unfortunately, until such time as you actually create new all-time highs, has to be treated as relief rallies, which doesn't mean that you can't trade it, right? It is still tradable. And you're seeing some big whales loading up positions. Are they looking at the RSI? I don't know. But this guy just bought $250 million worth of Bitcoin on Binance. This just came in, right now this morning, a couple of minutes ago. So some players may be positioning for some big moves. The problem with this when it comes to whales is we don't know if they're taking the another trade of equal size on other exchanges in the terms of a short position, right? So it's not, we don't know who this person is. So you have to be careful of that. But the point is, the RSI is breaking the downtrend. And as long as Bitcoin closes anywhere here, right now at this closing candle or higher, it means that the RSI would have broken this downtrend. And we already saw the shift occurring on the daily time frame, right? So there's some good things to look at over here. Downtrend, RSI starts to break out, holding that key level. And this is what we said on the weekly was very, very significant. We wanted to see the RSI hold this 44 level specifically. And if you do hold that 44 level specifically, then that allows for the opportunity to start to actually look for some long positions leading into next week. And there is liquidity stacked on the upside right now. There are almost $80 million worth of liquidity at $86,400, $500-ish dollars, right? That is untapped liquidity in the form of short traded stop losses, which are most likely going to get squeezed into. And we're on the cusp of a very big move happening. Remember, when the market is boring and flat, it takes a very, very small player like a whale like this to come in to create a big breakout, right? 250 million is still small relative to the tradable volume on Bitcoin, in Bitcoin on a day-to-day basis, right? So in a low volume environment, $250 million might have the same effect as somebody coming in with $5 billion and putting a buy into the market. So it's food for thought, right? Pay attention over the course of the weekend, because look at the volume, 24-hour liquidations sitting similar to yesterday at that 124 million, which is very, very low in terms of liquidations. So the next big move will probably create a big spike and liquidate a whole lot of players. The daily exchange volume does still continue to trend towards the downside, which is cause for concern. But if the RSI on the weekly breaks out, I'd probably put that above the pecking order in terms of what holds highest priority and is most important. I'd probably put the RSI above this daily exchange volume, and we can see price consolidating multiple days now. We've got 1, 2, 3 candles. We're working on the third candle, open and close above this downsloping trend line over here, but still the level to reclaim remains exactly the same. That is taken from Wednesday, the 2nd of April high at $88,000. You really would want to see a couple of candles closing above that orange line to consider the structure broken. And then you can start to look to buy the high lows in combination with your weekly RSI breaking out. So that's ultimately the picture. That's what you're looking at over here. Here is your, of course, 4-hour time frame. Price grinding into that resistance again. We've reclaimed the Monday low. We spoke about the opportunity to take that long trade. Remember, we did drop this, of course, in the Whale Room Discord, right? So if you did go into the Whale Room Discord, under my section specifically, Captain's Take, I did outline exactly what we're looking at in real time as price was holding below there at about $83,000. And of course, now you are starting to get a bit of a move over there, right? So you can tighten your stops, hold the position over there. There's going to be a big move very, 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 very soon. I wouldn't be surprised if it even happened before Monday, catching a lot of Wall Street off guard, right? Why? Because markets are closed in the traditional sector, and those guys mostly trade the CME futures chart, which is the Bitcoin futures chart, which is currently trading at 85,110, right? So we will see what happens. We'll see what happens. There's a lot to play for over here, right? Another thing that I'm paying attention to is that usually this is the year you see a top within the market on altcoins too, because we usually see a massive drop in the fourth year. We see 3 years of sideways or up, 3 years of sideways or up for the Bitcoin dominance, and the fourth year leads to the massive drop. Now, Bitcoin dominance is on an absolute tear, and the next level of interest that I'm focusing on is going to be situated exactly here between the 0.786 fib and the 0.886, which puts it at a level of, in that yellow box over there, that's going to be, you can mark that off on your own charts if you want, that's going to be between 66.19% and potentially up to 69.66%. I like the 69.66% number. I think that there's a chance that Bitcoin dominance will run all the way up just before 70%. I can imagine the headlines, basically capitulation across the board on altcoins, and then that possibly leads to the next move down, right? With ETH BTC hopefully tagging our yellow line at 0.01. Remember, this is coming off of an inverse parabola, so a parabolic advancement towards the downside. And these parabolas can get aggressive, but eventually they break, just like NVIDIA. NVIDIA's parabola should be broken by now, right? Which is a bit of a scary sign. If that does break towards the upside, well, it would break. If it breaks towards the upside. That can lead to some very big impulsive moves, right? Into the next levels of resistance, underside resistance, 0.04457. If ETH does put in a move like that, that's 172% gain against Bitcoin. Usually this only occurs in the environment where the market is moving towards the upside and everybody is feeling bullish and euphoric. So it is food for thought, right? This is one of the contradictory indicators to, of course, this chart over here, which is your MACD crossing towards the downside, which has marked basically every single major top. All right, so a lot to look at. If you do want to learn more, where do you go? Of course, guys, reminder, please do jump into the school over here. Remember, if you do get this WEX user ID, you entered immediately into the competition to win a Ferrari. And on top of that, you can actually unlock access to all of these courses. So just by getting that WEX user ID, you can do any of these: Sniper School, Whale School, Crown School, Trading Accelerator, of course, with Dylan. Make sure you take advantage. We're giving you a lot of opportunity over there. And then, of course, you do have the Become a Whale sign-up promo code, which is Risen27, right? Risen27. Everything is linked below over here. That will only be available while those spots are still available, right? I think it's for the first 100 people. So yesterday we had a whole lot that have joined. Take advantage while you still can. Let me know if there's anything else that you guys want to have a look at. But that's what I wanted to share with you for today. Specifically, some of the contradictory indicators. Bitcoin dominance hasn't broken down. ETH BTC, going down to 7-year lows. Unbelievable. 7-year lows, right? So where does this put the altcoin season index? Of course, you'd be deep at the bottom of the altcoin season index when Bitcoin dominance is at all-time highs, which means if you believe, and this is a big if, because I'm not saying that this is going to happen. This is absolutely not financial advice. But if you believe there ever will be an altcoin season, then altcoins probably are almost as cheap as they can possibly get. You need to wait for a trend shift, right? That's what you need to wait for. Again, just join Whale School, save $2,000 by using the WEX user ID link, get verified over there, and we will see you on the other side. That is it from me. Thank you all for joining. Appreciate each and every single one of you. Happy Easter. I'll see you all again on Monday. Cheers for now.